Hello and welcome everybody. I'm Stephen and I'm a popular investor on eToro. Thanks very much for listening to my video today, and don't forget to like this video and subscribe to my channel. If you take out the time to do that, it would be really helpful for me. So in today's video, I'm going to be talking about what happened in the markets last week, and I'm also going to be explaining a bit about how our portfolio fared overall and a bit about the overall strategy of the portfolio. So to get things kicked off, last week was a very difficult week for the markets again, and which has been kind of a theme of 2022 as a whole. And the S&P 500 was down about 2.1% for last week, whereas the Nasdaq was down about 2.8%. So as you can see there, the markets did quite poorly last week, and that was for a number of reasons, which I will go into in a minute. Our portfolio fared quite well, I think, overall for the week, if we compare that to how the indices did. So our portfolio was down about 0.5%, which is quite a big outperformance overall of the indices. I think one of the reasons why our portfolio outperformed the main indices last week was the fact that I did multiple short-term trades. I think I did over 30 short-term trades last week, which really helped to dampen some of the volatility and allowed us to book in some gains. Another thing as well is I think that our oil stocks did pretty well last week. So Chevron performed pretty well last week, as well as some of our other kind of consumer staples types of defensive plays that we have in our portfolio. So I think overall we performed pretty well, especially if we consider how the technology stocks were heavily down last week, as well as crypto and some other of the major markets that we invest in. So to perform at just 0.5% loss for last week, I think is really good result. I managed to do this without cutting any of our major stocks. So some of these short-term trades, they really allow me to manage that volatility, but without having to cut my future growth runway on some of the major stocks that I hold in our portfolio. So as we move on to the global weekly market update, and I will start off with the US. So I think one of the major reasons why the markets were down last week had to do with the Labor Department figures that were released regarding inflation. As you know, inflation has been going up quite significantly in 2022 so far, and also at the end of 2021 as well. And these latest labor statistics show that inflation had actually gone to another 40-year high at 8.5%. And that is a 1.3% increase on the previous month of February. So we are starting to see that increased inflation, especially to do with the high oil prices and energy costs, natural gas and commodities and raw materials that have gone up a lot over the last couple of months, especially if we look at the Ukraine-Russia conflict as well, which has caused these commodity prices to spike, which has had a big effect on inflation. Oil prices also continue to spike, and now oil price is at about $108 per barrel, and that has gone up a lot over the last week or so. And the major reasons why that oil price and natural gas prices have started to increase again is a lot around the Ukraine-Russia conflict. And there was discussions yet last week from Vladimir Putin, who said that the Russia-Ukraine peace talks had broken down, and that had caused a lot of the oil prices to increase again as they expect a reduced supply of oil from Russia, which is obviously previously the second biggest oil producing country in the world. There's also a key market survey which went out to analysts last week, which actually states that most analysts expect growth to slow down and earnings growth to slow. And what are they saying is they expect a mid-single digit gain in terms of revenue growth in 2022. So this one is lower than had previously been anticipated. However, data from the US did show that retail sales had grown by 0.5% in March if we compare that to February. I think what we're seeing at the moment in the US is a risk off type environment for capital allocators. And that is because there is a lot of uncertainty around inflation. We also have that Russia-Ukraine conflict that's going on at the moment. We also have those fears of increased interest rates, which are expected to continue to rise in 2022. So this is causing kind of a risk-off attitude, and we are seeing a lot better gains from either commodities, or we're seeing gains from those more defensive type of stocks. However, I do think that sometime in 2022, I think as growth starts to slow because of these increased interest rates, I think eventually the US is going to be forced, and the Federal Reserve is going to be forced to either slow down or really stop those interest rate hikes over the year. I think there's still a little bit of a way from doing that. So I expect over the next couple of months for those, as we have more and more of those Federal Reserve meetings, that interest rates will continue to go up. But I think if markets do stall, I think it's very likely that the Federal Reserve may change their course in order to support those markets. But I think it's very important at this time that we have a diversified portfolio in a lot of different segments and geographical areas in order to be able to continue to have some stability overall in our portfolio. So last week saw Elon Musk, and as you may recall, a few weeks ago he bought a stake in Twitter, and he was going to be put on the board of Twitter, but he's actually turned down the opportunity to be on the board of Twitter. And what he's actually done last week was that he wants to take over 100% of Twitter and take the company private, because he feels that they can't implement those changes that they need as a public company. And maybe he has some dissatisfaction as well with the overall management team. So he actually made an offer last week in order to buy all of those Twitter shares at $54 a share, which was at about an 18% premium. However, this wasn't to be negotiated, and he said that this was his final offer, and he just cut straight to the chase and said what he was willing to pay for Twitter shares. However, this has been rejected by the Twitter board and some of the major stakeholders in Twitter. So it'd be very interesting to see what happens over the next couple of weeks, because it looks like he is trying to put together a hostile takeover of Twitter, and I don't think he is giving up this easily. So I think Twitter shares could be very volatile over the next couple of weeks. But if you ask my opinion, I think it would be overall a good thing for Twitter if Elon Musk did take over, because as we know, Twitter has had a lot of problems in terms of providing monetization or overall of the Twitter platform. And they have suffered on that account, even though Twitter is a very popular social media platform. So as we move on to Europe now, and again, last week was not that great for European indices, as most European indices were down again last week. And there again is having the same issues around supply chain, also having issues around increased costs of commodities, and generally a bit of a slowdown in the economy in Europe. However, last week, again, there was a discussions with Christine Lagarde, who is the head of the ECB. And what she said again last week is that she expected those to stop the purchasing of assets in Europe, which they have been doing throughout the whole pandemic, really, in order to provide stimulus to the European economy. However, they do think it is the right time to start to wean themselves off that stimulus and to stop those asset buybacks in the European economy. And what they expect is, they previously outlined that they expect that to stop in the third quarter of 2022. And she reiterated that point again last week, that they do expect those asset purchases to stop in Q3 2022. There was also some data from the UK which said that GDP growth had slowed to 0.1% growth for March. And if we compare that to the previous month in February, that was at about 0.8%. So we are starting to see a slowdown in growth, but that's not particularly surprising, especially considering there has been a lot of increases in the COVID-19 cases in Europe, but especially in the UK, which has caused a lot of staff absences, which has slowed down the economy in the UK over the last couple of months. However, on the flip side of that, we are seeing very strong employment in the UK, and the unemployment rate has gone down to 3.8%. And if we compare that to the month previously in February, that was at about 3.9%. So again, that unemployment rate is starting to continue to decrease over time. So we are seeing a very buoyant employment market, which is very different to what we're seeing in terms of inflation and growth. However, it does show good signs that there is a lot of demand overall in the economy, and there are a lot of vacant jobs on the market as well, which should continue to bolster the economy in the future. Again, on the inflation theme, we saw inflation continue to soar in Europe, and inflation was at 7% year on year, which again is a 30-year high. So not only are we seeing those high inflation figures in the US, but we are also seeing them in Europe pretty rapidly as well. So in France, over the last couple of weeks, they have started to battle it out in the first round of elections, and overall the polls showed that Macron is still in the lead at about 28%. However, catching up and close on his tail is Le Pen, who is obviously a very far-right, quite outrageous candidate in France. However, she is starting to build up steam. However, those two now will go head to head as they got through the first round of the elections. And it'll be very interesting to see in the second round of those elections whether Le Pen continues to build up momentum and can overtake Macron. So as we move on to China now, and let's be very honest, China has been suffering as of late. And there's lots of different reasons for this, but the Chinese market was down for last week. And I guess one of those major reasons is to do with the lockdowns that have been happening throughout China, but especially in Shanghai. And a couple of weeks ago, I mentioned that they had a two-wave lockdown in Shanghai, and they have actually been locked down since the 28th of March, in which they've had about 28,000 cases in Shanghai overall as a whole. And this is really starting to put pressure overall on the economy. And China is a little bit different from the West because they have a really kind of a zero tolerance policy on the pandemic, and they really try to stop the spread at source. And this is kind of the biggest increases in cases that we have seen in China since the initial outbreak in Wuhan. So again, a lot of pressure going on the economy overall. And this is putting kind of a paralysis on the supply chain in China. Obviously, lots of goods and services come from China. A lot of the factories have had to close down in different places throughout China. So this is continuing to cause ripple effects on the economy in China. And it will be quite interesting to see again over the next couple of weeks whether they start to relax that. I don't think they will relax that unless the cases come down quite significantly, because they always put a much bigger emphasis on stopping the spread than the economic implications on China. And on that supply chain paralysis that I was talking about, we have seen companies such as Tesla production in China, as well as Volkswagen, NIO. They've also all halted the production of cars. So this is one clear example of an industry which is suffering in terms of in China. However, by no means it is the only industry that is suffering. All manufacturing is suffering a slowdown at the moment. There was a statement last week by the China State Council in which that they said that they will use all monetary support policy tools at their disposal in order to be able to support and stimulate the market. And this includes reducing the reserve ratio requirement, which would put more liquidity and stimulus overall into the economy. And I think that this is going to be a big theme of 2022, especially as China continues to recover from the COVID-19 outbreak that they have had recently. And I think that they are very willing to ease significantly in order to support the economy. So although it doesn't look that great at the moment, I do expect the Chinese market to do very well, especially in that second part of 2022. However, it may be volatile for the next couple of months. As you all know, over the last year or so, the China residential market has suffered quite significantly. And that is because there was a lot of speculators in the market and there was lots of empty properties and people were taking out very large home loans, but with very little collateral. And we did see the hole start to come at the bottom of that market, and we saw a reduction in house prices, which had been soaring for the last 10 years or so. And China had really been trying to avoid that bubble by trying to take the wind out of the market when it was increasing quite significantly by doing things such as reducing the amount of loans that people had, making sure that people put more collateral overall in the market. However, as the market is now going down and quite significantly, they are looking to support this market. And in 17 different cities throughout China, they are now looking at opening up some of the previous regulations that they had in place around foreign buyers being able to buy residential properties in China, which previously were off limits to them. And I think that they are now trying to support this housing market in order for it not to have more ripple and domino effects on the overall Chinese economy. So as we move on to the top 3 performing stocks of last week, and in number 1, the top performing stock of last week was 𝗳𝗏𝗯. And 𝗳𝗏𝗯 is a hot pot chain restaurant which operates throughout China and also has some international branches as well. As you all know, over the last few months, China has been having these issues in terms of COVID-19 with these lockdowns in place. And this has been very bad for the stock because, as you can imagine, it's a restaurant chain. So people aren't going out and dining. However, as there has been a lot of decreases over the last couple of weeks, we did see a nice bounce back from 𝗳𝗏𝗯 last week, and it was up about 13.8% for last week. The second best performing stock in our portfolio last week was +100, and that was up about 9.6% for the week overall. And +100 is a broker, a little bit similar to eToro, which operates around the world. And that has performed quite well year to date so far and continued to have a good week last week. The third best performing stock in our portfolio last week was GPI. And the reason why GPI was up over 7% for last week was because, as I mentioned, a lot of those car companies, especially in China, have had to halt production because of COVID-19 situation in the country. And what this has led is to a more buoyant second-hand car market, which was very good for GPI as they are big, they sell a lot of second-hand cars. So let's talk about crypto. And last week, again, it was another tough week for crypto overall as Bitcoin continued to lose ground and has now just under 40,000 at about 39,000 at the time of making this video. We also saw a lot of decreases in terms of altcoins, and Ethereum was down also quite significantly last week. And again, the reason for this, and I've been saying this for the last couple of weeks, is we are really in a risk-off environment at the moment, especially as there are fears that they could increase those interest rates higher than people had been expecting. And there's a lot of speculation that they could increase those at the next meeting in May to up to 0.5%, which is almost double what the last increase was. And this is causing capital allocators to be a lot more cautious and conservative in their allocations. And this does have an effect on Bitcoin, even though there is a lot of buying pressure from large buyers such as MicroStrategy and also the Terra Foundation. I think that you do see a lot of these capital speculators start to reduce their holdings during these risk-off time environments. But that doesn't mean that's going to last forever. And actually the key on-chain metrics in Bitcoin have actually been really good over the last couple of weeks, and I've been watching those pretty closely. One of the key things that I've been watching is the amount of coins actually being moved off exchange. So the outflows from exchanges to people's private wallets has been extremely high recently. And this shows that most people are holding their Bitcoin for the long term, because if you move them to exchanges, you're much more likely to sell them. And the other thing is we are seeing an all-time high of Bitcoin not being moved from large wallets over the last 12 months. And this is really showing that people again are continuing to hold their Bitcoin. And I think that this could really start to set a bottom in this local price range that we've been seeing very recently. So I'm still expecting Bitcoin to have a good end to 2022. However, as I said before, there is a very strong support level at about 36,000. So although Bitcoin could fluctuate and it could go down a bit more during this period, I do not expect it to break below that 36,000 unless we see some significant news which pushes it and gives it that downward pressure. But I think it's much more likely that we will start to go up from here in terms of Bitcoin and altcoin prices. There's also been a major breakthrough with regard to the 𝗳cie versus Ripple case. And this has been ongoing for the last 18 months or so, as the 𝗳cie have accused Ripple of selling illegal securities in terms of the XRP token. However, a major breakthrough has happened, and that is that the judge looking at the case has ordered the 𝗳cie to reveal the emails from the previous SEC commissioner, in which it is expected that somewhere within those emails that there is a lot of discussions between Ripple previously and the SEC, in which the SEC will acknowledge that the Ripple were selling these XRP tokens to major institutions. And this is expected to be very positive for Ripple because if they can make the case that the SEC knew about what was happening over the last several years previously to that without going after them, then it is quite likely that Ripple will win the case. Anyway, it's something to look at over the next couple of months as we proceed, but I expect that case to be settled, and it's looking more and more likely that Ripple are going to win. Last week, a senior representative of Amazon also stated in an interview last week that Amazon were quite likely to go into the NFT space and start to sell those NFTs. NFTs have been a big craze within 2021 and 2022. So it does make sense that Amazon, who are all conquering and want to take over all industries, are going to want to be involved. So that is overall very good for the crypto ecosystem when you have big names such as Amazon starting to adopt some of the use cases of crypto. Thanks very much for listening to my video today. And I know that 2022 has been tough. And it's very easy for me to sit here and say, okay, we've outperformed the benchmarks this year, and that we are roughly in line with the S&P 500 and actually beating the Nasdaq overall in our portfolio. But I do understand that it must be very frustrating for new copiers that haven't been in the market very long and maybe have not seen this market dip that we have seen over 2022. However, it's not something to panic about, and it's very important that you keep a long-term perspective. And although your portfolio might be down at the moment, and it might have been down for several months, this is still a very short term in terms of the stock market movements. And as you know, the S&P 500 and the Nasdaq, they continue to show positive results over long periods of time. And you may have the odd few months where the market may down. You may even have the odd year where the market will be down. But generally, if you look at the overall indices, that we expect these companies to continue to grow over time. So you have to be patient with those investments. And I do expect us to have a good second half of 2022. And I really hope that we start to see some more clarity around the what's happening in terms of inflation and those interest rate hikes. And also we see a lot more confidence coming into the market as hopefully those cases of COVID-19 beginning to decrease and the economy starts to continue to go back to normal. But it's not a very fast restart because you have these kind of stop and start periods in terms of the economy. So please stay patient. Also, don't forget to join my Discord group. We have a really awesome community, which we have regular discussions every single day where we talk about the markets. We also have people following my trades and seeing what's happening on a daily basis. We have a trading bot in there as well, which shows all my trades for the day. So have a great week ahead.